Now, with the pandemic wreaking havoc on the daily life of millions, investors were also disappointed by the lack of broad measures in Trump's plan to fight the pathogen, prompting traders to bet on further aggressive easing by the Federal Reserve. The Nikkei in Japan crumbled over 4% to 18,559 points there, its lowest mark in quite some time, with the Hang Seng also going to its lowest mark since April 2017, 24,309 points. That was down 3.7%. The Shanghai Composite falling off 1.5% there to 2,923 points. Over on Wall Street, well, that plunged last night with the Dow confirming a bear market for the first time since the 2008 financial crisis. This comes, of course, as the World Health Organization called the coronavirus outbreak a pandemic. Now, a bear market is considered when the market falls at least 20% or more from its most recent high. And of course, that was reached on February the 19th out in the United States. The Dow Jones Industrial falling nearly 6%, 5.9, 23,553. S&P 500 was 4.9% down as well there, while the Nasdaq Composite is 4.7% down, 7,952 points. Let's head on over to Europe then. Of course, market pictures have been negative across the globe, including out in Europe, where, of course, that travel ban is bound to take effect as well from Donald Trump administration. They're saying that, indeed, we're not going to allow European nations to come into the United States or perhaps go to outside, of course, of the United Kingdom, surprisingly, which also has almost half as many cases with perhaps a smaller population size as well to the United States. The FTSE, though, is still down 5,546 points there. The CAC 40 out in France is at 4,338 points. Locally, also, another decline then for the market. 45,933. Massive falls on the local bourse. Big falls as well for the likes of Sasol, and we'll get to chat about that in just a bit, with the industrials also going down at 63,000 points on that front. Over into the commodities board then as well. Well, those shares have seemingly also beginning to just go lower and lower. Where to from here? The fears around coronavirus and perhaps not enough stimulus being put into the market, not necessarily helping when it comes to this. And where is the safe haven trading now? It doesn't seem to be in anywhere here. And on to the commodities themselves, well, the resources, only gold headed higher, but only just. It doesn't seem to be heading as far as one would have thought. Perhaps the fears still around the market are to take your money away and to stay away from the market completely. Platinum is down, should I say, while the oil price is also slipping down today, around 4% or so at $33.60 a barrel. 16.38 for a US dollar now, as that rand continues its weakened stance. Of course, coronavirus cases in South Africa reaching 17 as well today. 20.88 for a pound, 18.40 for a euro. And a quick look at the BRICS nations, also pretty stable at this point in time, still sitting within range now as well. Very quickly, in company news then, we saw a massive fall off in recent times with regards to Sasol. And it certainly has fallen off again. It completely has been decimated. Nearly 95% of Sasol's value has gone awash over the last year or so. Having traded around 470 Rand a year ago, and even 600 odd Rand a share at about 2-3 years ago, now it sits at just around 30 Rand a share. It's 121 billion Rand of debt that Sasol currently sits with. Not helpful in a scenario where that becomes 6 times their market value. They're now worth around 19 billion Rand, having fallen off 40% just today. Of course, the reasoning behind this massive fall is not just with regards to coronavirus and the oil price, of course, just going down because of demand on that front. What has also happened is that Russia and Saudi Arabia have ensued into some sort of oil war. And that means that Saudi Arabia has decided to flex its muscle and put more production onto the table and say they will pump more oil into the market, which means that the price will go lower and lower. And that is seemingly what you're getting with that oil price at around $33 a barrel. Saudi Arabia can certainly survive on this situation, but other companies, other countries certainly cannot. And these are the fundamentals of Sasol, and this is why it continues to languish, why it continues to go down. As I said, 121 billion rand worth of debt. That is 6 times its market value. It doesn't even have that in cash. And I'll talk about why that's such a massive problem. Lake Charles's total cost overrun of around 50 billion. That total project is now estimated to go to around 200 billion US dollars. It's supposed to be only 8.9 billion US dollars in terms of cost. It's now going to spike up to around 13 billion US dollars, or around 200 billion rand. Rather should I say, an undiversified business. Lake Charles was meant to be the business that helped Sasol diversify its business and not focusing too much on oil, having begun that project in around October 2014. It's now 6 years later and still an incomplete project that is costing at least 40% more than it should, and it's going to hurt even more. A new CEO now sits at the helm of the company, having seen the previous 2 co-CEOs being put out of the company. So a new broom, I suppose. Whether it will be able to sweep clean in an environment that seems to be very topsy-turvy for it is a big question. And success hinges on the oil sector as well. They don't control that oil sector. So how then can they just hinge on that and that alone? And of course, they have debt covenants. What that essentially means is that if their share price reaches a particular level, which is suspected to be 45 rand a share, then it does mean that their debt of around 121 billion rand becomes due almost immediately. Certain projects of it, should I say anyway, certain parts of that debt certainly become due immediately. So it does hurt them. And here's the funny thing. Sasol have hedged against the rand, but not against the oil price, meaning that they've certainly put a benchmark on where the rand is for them to trade, but they haven't put one through for the oil price. So it's going to hurt, and it may hurt for even longer. Where to from here? Who knows? Chantel Marks knows best, though, on this one. Let's chat to her. She's at the Johannesburg Stock Exchange. Chantel, thank you so much for the time. Sasol going down 95%. Is there anything left?
Well, absolutely. I think what happened here was that there was a lot of sudden shocks and a lot of stress to Sasol very, very quickly. So particularly what happened was that this Russia and Saudi Arabia impasse around oil production resulted in the oil price coming down quite significantly. Sasol's share price moves along with the oil price because its profits are determined by how high or how low the oil price is. Sasol typically wants a high oil price and a slightly weaker rand, and that usually benefits them. So effectively what happened is that because the oil price is so low, investors started thinking, but are they going to make enough money to pay down their debt? I think you kind of explained it quite nicely as well. And what happened was that there was a run on the share price, and from what I can gather, it seems as if there might have been some margin covering. So what that means is sometimes people with a lot of shares in a specific company will use those shares as collateral for other loans. When the share price falls below a certain level, the broker that keeps those shares in custody will sell it into the market, and the more shares that are sold in the market, the more downward pressure there is on the price. And it's kind of a self-fulfilling prophecy and kind of a cycle of doom. So even though the share price has fallen quite significantly, it doesn't mean that there isn't any value in the share. It just means that there's loads of price pressure. So is there any hope in the company then? Is there a likelihood that things could get better from here on in? Or has it just gone too far? So I think what we need to consider is there a likelihood of the oil price staying at these low levels for a very long time? If oil prices recover, there certainly is quite a bit of hope for Sasol. The only issue is if oil stays around the $30 a barrel mark for a sustained period of time, Sasol will have issues. They won't necessarily go bankrupt, but they might have to ask equity holders or normal shareholders to bail them out. At a very low Sasol share price, as is the case now, they'll have to issue a lot of new shares in order to pay down the debt that they're required to pay down. An alternative scenario is that bankers or lenders could look at this $30 a barrel oil price and say, well, this isn't necessarily sustainable longer term. It doesn't make sense for the Saudis or for anyone else for any other oil producing nations to have oil prices at such low levels. So they might look through this and allow Sasol temporary reprieve from their debt covenants and give them some breathing room going forward.
Yeah, that's going to be a very tough one. Look, they certainly won't reach the heights of 600 odd rand a share or 470 as they did about a year ago. So it becomes a whole lot tougher. New CEO, what do you say to the markets in a time like this? Should the JSE have also said something, seeing such a calamitous fall? Should the company also come out and give out a few words of calmness here?
So I think the company is waiting to see how the oil price situation pans out. So they initially had a conference call scheduled for Tuesday, and that was after Moody's downgraded their debt or their debt rating. And because all of this started kind of triggered on Monday, they decided to push out that conference call to next Tuesday. I think that probably added to the panic in the market. But they are planning to say something. They're just planning to say something next week, Tuesday, and not right now. It would have actually been quite nice to have had a statement from the company just to calm investors' nerves and to give some sort of guidance in terms of what they think is going to happen going forward. Instead, they just said that they've hedged the rand, but not the oil price, which is not necessarily the kind of messaging that you want when oil prices drop to $30 a barrel.
Yeah, certainly not comforting at all. All right, look, we could talk about Sasol all day. Let's very quickly talk about Sanlam, though. They came out with a set of earnings there, managing to grow their dividend, managing to grow their net operating profit as well by around 9%. It looked like a good year, despite the fact that the economy was actually in the doldrums. They didn't get any benefit from the economy here.
Yes, I mean, that was a very good result from Sanlam. And what really impressed me was the fact that their new business margins grew. And it's close to 3%, which doesn't sound like a lot. But when you compare it to the new business margins in some of the other insurers, it is quite a bit higher. I mean, we're talking about business margins below 1% for most of the other insurers. At best, they'll probably in some reporting periods say 1.5%. So 3% new business margin is really, really impressive. They also received some support from Santam that released actually quite decent results. And then, of course, markets also helped them because they have a lot of money on their balance sheet on behalf of their shareholders as well as their policy holders. And when markets do well, as it did up until December, I know that feels very far away, but we had a pretty good year last year, then Sanlam does well. There are a couple of one-off funnies within that result, so I wouldn't necessarily pay too much attention to the headline earnings per share number as we would under normal circumstances. But as you mentioned, that net result from the net result from operations up 9%, pretty solid in a very poor environment.
Yeah, certainly so. Very quickly, are you worried at all? Is this a market that you'd be worried about, seeing things fall off so badly? We looked like we were going to 60,000 points. We're now at 45.
Yes, so this seems to be a very big shock to the system. The fact is that it's a two-pronged shock. So it's the coronavirus spreading a bit faster spreading faster than initially anticipated, along with the oil price shock. And it doesn't seem as if monetary policy makers are necessarily their attempts to do something is not necessarily giving markets the boost that it needs. I think what investors need to do is that they need to try and look through this kind of shock. They need to assess the fact or accept the fact that the first and second quarter of the year is probably going to be challenging from a growth perspective. And then they need to decide, is this going to be systemic? Is this going to change the longer term trajectory of the market? Usually when we get down markets like this, there is an element of panic associated with it. I would caution against panicking or doing anything for that matter at the moment, and to try and look through this specific bear market. And the market has never stayed down.
So
it always at some
uptick.
points moves through these cycles and up.
expect another uptick at some point. The question is just where the bottom is, Chantel. So we'll hopefully see out the bottom and have you to relay us right through it. Thank you so much for the time, though. Really appreciate it. Chantel Marks there from FNB Wealth and Investment, joining us live from the Johannesburg Stock Exchange. Now, my colleague Mbongeni Mutwa joins you right after the short break for the labor force. Do stay tuned for that. From me, it's goodbye, though.